Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on May the 18th, 2022 with a Forex Trading cryptocurrency trading and market analysis for you. Before we get into this webinar, we just want to show you real quick our disclaimer to remind you that this webinar is for illustrative and educational purposes only. And let's see, if you have not done so already, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Alright, now with that, let's get to our live action screen here. So we have the Forex-Trading-Unlocked.com website pulled up, and we just want to remind you to also like and share, if you wouldn't mind, our channel here as we're going through this video. And let's see what else we're doing here. We're also on Discord now, and let's see, I don't know if I got this right. No, that's not right. Okay, so we are on Discord. We just we had a bunch of interest from a lot of our viewers that said try and get us hooked up on here so you can interact a little bit more with the chat. So we are on there, Forex Trading Unlocked. Sign up, and the video is going right now. So I guess I don't know how the chat work part is going, but that is going. All right, so we have this incredibly crazy trading day going on today. The US dollar, as you know, has been getting a little bit of a pullback as the other currencies have started to gain some strength against the US dollar. And you can see the US dollar yen right now is pretty much laying on the offer. Today, this is one of the more active currencies. It is been laying on support for the last, I would say, about 2 hours, making new lows and just hovering off of the lows. A lot of weakness in the US dollar yen trade today. However, it's really more of a digestion period that we've been going on. Remember that we are floating just below these highs that we set already just a week and a half ago. All right, the key level to watch out for is this high that we set back on the 9th, right around 130, 130. Any trading above here obviously would have us pushing resistance as the bulls try and push forward. Now we know that with our interest rate policy in the U.S., that's helping to strengthen the U.S. dollar, especially versus the yen, because of their interest rate stance that they have in Japan, as well as the price of oil, which is upticking today again. And I think that's going to help to bring back support in the U.S. dollar yen as well. Right now, I would look at today's sell-off as a profit-taking move. So I wouldn't get too crazy about the fact that you're making lower move lows and lower move highs on an hourly basis. Okay, so yes, the very short-term trend is bearish. However, on the daily basis, we are still coming off of a higher move high, higher move low situation. So unless we take out the low from last week here of around $1.2751, I wouldn't expect to see very much more of a lower trending market for the US dollar yen coming up over the next few sessions, if you will. So right now, I think you see exhausted for the day, pretty much the whole blunt of, if you will, of what is going on in the U.S. dollar yen. Remember, the Japanese markets are closed now. The European markets are closing also. So now we're just on the American trade. So as far as for us, I don't think that we're going to, unless we have a major market move in the equities as well as in the bond market, then perhaps we might see something happen. In fact, let's pull up the CME website here. We have, let's just do a little reload here. Yeah, the bonds are only, they're only up a little more than half a buck, 18 ticks on the day right here at 139.07. So that's probably helping to fuel a little bit of the profit-taking move in the U.S. dollar yen. So I would watch out when you start to see the U.S. Treasury bonds start to sell off again. That is most likely when you're going to see a rebound in the U.S. dollar Japanese yen. So this is just a profit-taking move going on in the U.S. dollar yen, just like you have it going in the bond market. Those two things are pretty much going in tandem right now, and I believe that that's when you will see us set a new short-term low in the U.S. dollar yen trade and start to see the bulls come back. So be very leery of a bear trap that is manifesting right now here in the US dollar Japanese yen trade. One thing I would say is that if we do have some Bank of Japan intervention, which It's kind of funny. They had said that they were going to defend their currency, and what ended up happening, well, they're not doing it. So that's something that we would have to say, well, gee, why is that happening? I can't really tell you why it hasn't happened, because a month and a half ago they said that the Bank of Japan was going to protect their currency should it touch 130. Well, we're trading at 128.60, just below 130 right now. We've pierced it already a few times, bobbled around that level, and we have had zero intervention from the Bank of Japan or the Finance Ministry of Japan either, which they were in full support of defending their currency. This was back when it's peaked right here. This is when you can tell exactly the day they made the remark. This is March 28th, which is now a little over a month ago when that happened. That spike allowed this correction, and then boom, market momentum just continued to pressure through resistance. This bull is very, very strong. Now, as far as how high can it go, well, that's indicative of how much higher oil can go, as well as how much lower the interest rate pricing will go. Remember, there's an inverse relationship between which way interest rates trend and which way rates go. They're all, as markets trend lower in the bond market, the 10-year market, rates go higher. So, and that will also influence this U.S. dollar yen and most likely cause a snapback. So be very cautious right now, selling into these lows right now with the U.S. dollar yen. And I'm not saying that we still can't test this 127 area. So, oh, by the way, I want to say thank you for that like on YouTube. We just put up on our YouTube stream, if you're watching us through there, our Discord invite, so you could join us there, if you will, as far as in the chat, and get that going and sign up. We're working on making that happen. And then we also have done the same here on Twitch as well. So if you guys don't mind sharing our Twitch stream and our YouTube stream today, so we can get everybody to also get that Discord link out there as well, we would really, really appreciate it. So thank you very much, all you guys that are helping us out with spreading the following. And now we're also trying to help you out with this whole Discord thing, and see how we can get this to work out. So, all right, so let's see what's going on. We have, all right, trying to get this Discord thing to work right. I don't know. It's doing something. It's doing something. I know it's still streaming on YouTube and Twitch, so that's all that matters. We'll figure it out one of these days. All right, video connected, share your, I'll just share the screen. So it should be sharing the, I don't know what it's sharing now. All right, swap to resume your application. Okay, all right, sorry guys, I don't know. We're trying to make this new stream connection working, so as long as we got this working. All right, so US dollar yen, I'm just gonna minimize this Discord and get away from that. I got the YouTube up, I can see you guys there. So that's all that matters, that, and on Twitch. All right, cool. All right, you guys just stay where you're at, and we'll keep on streaming this now, all right? Okay. So, okay, cool. All right, so US dollar yen is on its lows. All right, so now let's go to the euro US dollar, the major component of the dollar index. This one is on its lows. So it's kind of funny how the dollar had been under pressure for the past few sessions against the majors, not necessarily the US dollar yen, but the other ones have been. They've been challenging resistance, meaning the euro US dollar, as you can see, has had a nice corrective move higher. We are coming off of this low right here at $1.0347. Should we take this out? Well, obviously we're trending lower. This market's making lower move lows and lower move highs. Overall, I think that there's a really good chance that we could see parity in the euro coming up within the next couple of months. Is it going to happen in the next couple of days, the next couple of sessions? It's very possible that it could. But right now, I think it's trying to grind lower, is because, remember, the euro is a very big currency to begin with. There's a lot of factors, though, that weigh on it. There's the interest rate factor, there's the oil factor, there's energy costs, there's the whole Ukrainian-Russian thing, there's just so many things that are weighing on the European Union and the economies of Europe that the euro just does not have the ability to sustain itself as far as being a bull right now. Even if they have central bank intervention, I don't think they have the ability to defend their currency. So they need economic factors to come in to bring back some support here for the euro versus the dollar and even other currencies, because the euro is definitely in some sad shape right now. So today, is it a profit-taking move? Very well could be. We could still challenge resistance. I'd be very cautious. The key thing is, can we get above this 106.51? I don't believe so. I think the only way that you could have that occur would be you'd have to see an incredible rally, especially in the U.S. 10-year note futures in the cash, just to even remotely fuel a spike up to that area. You would also need a tremendous sell-off in oil. I think if you could get oil below $90 a barrel, which we're not anywhere close to having that happening right now, then perhaps you could see an extended type of rally with the euro-US dollar. So I would look for rallies to sell. Could be today is the day where we're turning. I would use a lot of caution that, if you look at the dollar index, which we should do that real quick. So you can see the dollar index been under pressure for 3 sessions, with yesterday getting really hammered. But it's coming off of a higher move high. It just made a new high just a few sessions ago. This is a profit-taking slide. The only way we're going to see any big correction in the dollar index is if we take out this last higher move low that was established back in the beginning of the month of May. So, and with that being said, you should view this as also the same similar type of action to be expected. The euro is the biggest component of the dollar index. So if the dollar index was if the dollar was having a profit-taking slide, this bull trap has already occurred. We've spiked in, and then today's high probably could be most likely the high of the week for the euro-US dollar. There's a lot of numbers that are coming out bearish for the economies of the world, even in the U.S. So the U.S. dollar is not strong in this case. The only thing is that the euro is so weak and looking weaker in the forecast that's why this market is under pressure. We've had one of the biggest corrections that we've had in the past 6 weeks over the past few sessions. This is all it can do. There's so much downward pressure and momentum on these currencies that even if they can chop around and go sideways, they can poke through resistance a little bit, but they're more likely to hang and be pressuring support than to resistance to the upside. So that's something you need to be mindful of. We've been talking about this market being a sell rally market forecast for a while. The overall fundamental aspects of this trend have not changed. Now, technically, you have to be careful. This is where, when you have such extreme trends with this much momentum, your technical indicators tend to be overdone. They're lagging to begin with. They're way oversold, and they're going to continue to be oversold for a very, very long time. And eventually, there will be a major correction to the upside. You will have a bullish move in the euro-US dollar and a bullish trend. But right now, all bullish trends are to be viewed as corrections until those fundamentals change. And right now, we don't have anything to even remotely put us in a perspective that it's going to change over the next 3 to 6 months. Now, 3 to 6 months from now, could there be events that happen that could start to turn the tide and then shape up a reversal of trend? Absolutely. But right now, we don't see any of that occurring. So key off of this 105.67. If you were to get it, let's take a look at it from this perspective. If you take this last major swing high down to our current swing low, this market already hit the 0.382 area on the Fibonacci. 50% comes in right at this high here. So this could get choppy right around here. I wouldn't doubt that you see, if we did take out this high, a spike just a little bit above it, and then that's it, and then we start to go sideways. Remember, we're coming into a summertime markets, holiday trade for the U.S. In the next 2 weeks. Does that mean that we're just going to dry up? No. There's too many factors going on in the world that are going to continue to make things be very volatile, that's for sure. So I don't think you're going to see necessarily a slowdown in volume or trading or sleepy summertime markets, that's for sure. But I think we will be in a bit of a range trade over the next, I would say, 1 to 2 months, because we have a lot of things that are coming into place. We have all this catch up with global economic numbers that are all they're all trending in the same direction, and it's not in a good one. You have as far as the purchasing power of consumers is decreasing globally. The cost, the production costs of manufacturing and any type of thing around the globe is getting higher. Transportation costs are soaring through the roof. So these rampant inflationary factors, and even if they were to cap, are still super inflationary for a very long time. They're going to have a big impact, and you can see it how it's already impacting the consumer and what's going on with the U.S. equity markets even today, as we've had a little bit of a reprieve from bullishness, that's for sure. So Euro US dollar, we're looking for a sideways action, definitely, if anything, one last spike higher before we trend into support and take out, have a test of this $0.0347 area. Now, when we get below here, do I think we could have a huge sell-off and hit parity in a couple days? It could happen. I don't think so. I think what you're going to do is see a grind down towards 102, maybe even touch the 101.75 area, and then get a bounce, and come back up to this area here, where support becomes resistance, kind of like what it's been doing here. And I think that's what you have to view this is it's going to start to slinky down, and the steepness of this slope, if you look at it, isn't bad. This is on a very, very nice gradual slope. It's pretty much a 45-degree angle, and that's a very good average when you're maintaining that 45-degree angle of slope. The momentum isn't overdone, and it's also it's not weakening either. It's just the right mix for that market to snake along, making lower move highs and lower move lows. And we're going to continue to watch that as this occurs. So anyhow, we've dwelt on that one a lot, and that's because it's the biggest currency versus the dollar. British pound US dollar is also acting the same way as the euro US dollar is today. Obviously, with a little bit more volatility. I think that the pound, no matter what, is going to maintain its bearish posture as well as the euro is. The difference is that you probably have a little bit more activity as far as pricing, but you usually have that with the pound. And the nice thing is that you can see that even on a daily basis today that we've had a lot of market action. We've set a nice low just like we did in the euro US dollar just a couple of sessions ago. And if you look at here, it's kind of interesting. Let's just go from the most recent swing high. Like, we already passed through all our fib levels. So this is pretty much it for a blow-off corrective move from this swing high. But if we bring it back up, let's go to something more solid right there. Okay, well then, we still have a little bit of a ways to go. So should we take out this last swing high here that we set a few weeks back, then I would say there's a good chance that we could continue up into this 127.34 to 128.64 range here. Oh, by the way, thanks for the likes there on YouTube. We got some viewers there, and if you got any questions out there, don't forget, put the questions in the YouTube or the Twitch chat right now, please, because we can't get the Discord working right. We have it, something's streaming there, but we don't know exactly what. But we'll figure it out one of these years. Anyhow, it's brand new to us. So, but anyhow, are we getting a end to this correction today? It's very possible. We'll see how the trading manifests over the next couple of days, especially with the how the reaction was to the oil numbers today, and see how the interest rates end their trading today. If we start to see a sell-off over the next 24 hours in the 10-year and the 30-year, that would be a very strong indication that we're running out of gas on this profit-taking slide in the U.S. dollar. We are already today. Could it be done? I don't know, but I would use caution. I think that anything that's occurring here as far as bullishness, if you have a buy signal, is a bull trap in the longer term. Remember, now this one has a little bit of a steeper slope than the euro US dollar. That's why we're getting more of extremes for the corrections. So like I said, we could have a challenge up here for a spike, but I think it's going to end just like this one did here. We had this market where we set this low, we started to look really good, but then boy, did we fell out of bed so hard. We went from making a lower move high to a lower move low all in one day. That's a pretty big deal, or within a period of 2 sessions, excuse me. So for that kind of volatility, I would expect to see more of that in the pound US dollar for sure. And we'll see. I mean, there's some other factors that give the pound a little more strength, so we may see some divergence and some different swings as far as continued weakness in the euro US dollar, and a point to where the pound US dollar starts to, at least I would say, chop around, just to develop maybe a little holding pattern, a little sideways trade. The one thing that the UK has going for them is energy costs. While they are there and exploding, they have oil for one, and so that is a big deal. So they can minimize the inflation of transportation costs and other things because of the ability to have that the raw commodity. So we'll see how this interacts. Do we have any questions on the pound out there, or no, nothing like we have no questions on either one of these. Okay. All right, just thanks for the people who are reviewing. So US dollar Swiss, this is an interesting currency, if you will. It spiked above parity a few sessions ago and had a nice sell-off yesterday like the other ones. If anyone's volatile in the European sector, it is the US dollar Swiss. Now, interestingly enough, this race to parity that it's had has all been basically driven by the fact of the Ukrainian-Russian conflict, because the Swiss joined in the restrictions that are being put around Russia, and how its ability to move money or to not move money has become a very big issue. The Swiss are on the side of Europe and Ukraine, and they are locking up Russian bank accounts and what have you. Now, to many, this is not a moral or ethical issue. When it comes to the Swiss, they're always neutral. They were neutral in World War I, World War II, good guys, bad guys, whatever. That's what they do, and it's something that's always been accepted. The fact that they have now broken that neutrality, which they have had not just for the past 100 years, but for hundreds of years. That's what the Swiss banking system is built on, is privacy. And now that privacy has been completely shattered. So that being said, I don't think that the Swiss no longer franc, which used to be a flight to quality currency, it may never be again. It's just because it just as what they've done to the Russians, you have to assume that there's a lot of other interests, especially any ones that even have any dealings with the Russians, where they have probably are starting to think about withdrawing many of their funds from these banks. That being said, we could see I wouldn't say a collapse, but you could see a very big issue with the banking system of Switzerland, and also, which this would impact the government and also the currency as well, as we can see right now on the charts. So I would be mindful of this sell-off. Do we have a sell signal? No. How big of a correction could this be? Well, we've had a nice run up since back here at the end of March. So if we have this, we got the Fibonacci here, 0.382. There's a nice minimum price target for you. We have the 50%, which is also a GAN number, and a couple other ones. So somewhere into this area, I know it's a wide range, but then look at what this market has done over the past few months, let alone the past year. This has been a major bull. So you have to be mindful of this area here. Now, I think that in the short run, probably 97.29, this is most likely your extreme for a slide right now. I would say that if you go off of this last low here, and then we go to right here, we've already fallen through we're already at the 50%, almost at the 50% level, and the 0.618. So if this is just a minor sell-off right now, we're never going to make it to this bigger corrective zone. Okay? So what would get us down to here? Well, right now I say that this is where you're going to stop your correction in the short run, at least for a bounce. Will it hold? Could it go sideways and then fall apart some more? Well, of course it could. But right now, the trend is your friend. You're coming off of a brand new higher move high. You're looking to establish a new higher move low. Even if we came down to this 97.29, we would still stay above this major swing low here, which would be holding up the trend. It's not the velocity of this rally is pretty strong, so markets tend to go out like they come in. A short-term correction that gets us down to these extreme prices would be healthy to help push out the market in time and let that average of price and time come back to a more equal medium, as far as having a kind of like I said before, the 45-degree trend. Now, is that absolutely what it needs to do or should do? No, but it tends to be when you have that type of average slope that the swings are not so severe. And once you breach either to the upside or break to the downside in a fashion where that momentum is so the slope gets steepened, well, something has to balance it out. And usually before it balances out, you get that how it goes out or how it goes in is how it goes out type of move. So that's where we could see an extreme sell-off down to this area. But with the momentum in place right now, if the other currencies turn, then I would say look out, this thing is going higher again. Now, interestingly enough, the euro and the pound, they're trending lower, and the U.S. dollar Swiss and the U.S. dollar yen, which means that the Swiss and the yen are trading, they're higher, they're stronger. Well, like I said, these are all profit-taking moves. I will be very mindful of it, just because the two big currencies like the pound and the euro are bears today. That doesn't mean that the Swiss and the yen can't be bulls today. Remember, all the currencies don't just trade one way versus the dollar. In fact, there's always days and breakaways, and that's how you see which one is stronger or weaker versus the other ones. So, and I think right now what you're seeing with the U.S. dollar Swiss, just like as in the yen, is a profit-taking trap. It's just a slide for a short term, and then we're gonna boom, reverse to the upside. I don't think we're through with parity with the U.S. dollar Swiss. If anything, I see us locking into a trend, have higher move highs and higher move lows, continuing into this summer and getting us back not just above parity, but holding the levels above parity. Now, how high could it go? That's a whole nother question on the longer term basis. We have to see how things go as far as with the UK and also with the EU when it comes to the what's happening with Russia and the Ukraine. Should we start to see some sort of resolve, which, to be quite honest with you, this is not to get political or anything, I don't see that coming anytime soon. The atmosphere, not necessarily on both sides, but definitely on the West, is not about just a peaceful resolve. They want to push all the way into Russia. So this is just a gateway conflict. This is going to be, in my view, this is the European Vietnam, and it's going to hopefully be subside soon and can somehow cooler heads prevail. But with the current environment that we have in the U.S. And the current administration and what their demands are and desires are, if this is the case, we're looking at this conflict, definitely being with us a year from now. If that's the case, it's going to continue with the hit inflation and other things in the marketplace. This trend here, we could see the Swiss up at $1.20. If you check out tfnn.com, that I'm on every Wednesday morning, I talked to that in their live broadcast this morning, and they're like, wow, that's a big projection for the higher trade with the Swiss. But my whole thing is that this rally that we're seeing now, this has not just something to do with COVID or the supply chain, blah, blah, or inflation. This rally here has to do with a lack of confidence in the Swiss government, in the Swiss banking system. And if that's the case, that's a big fundamental factor that didn't exist ever in my lifetime. It hasn't in hundreds of years. So that we don't know what kind of an impact that would have, but I'm going to go on the the premise of reason that if this is the case and my scenario is correct, that people are reevaluating Switzerland and the value of the Swiss banking system. If that is the case, well, then the Swiss weakness will prevail. You will see it leak into all the other currencies as well. And I think that $1.20 for the U.S. dollar Swiss is a very rational number to shoot for. We may even see it as high as, especially if you get oil up to, $1.50 and higher, up towards 200, which that's going to happen also eventually. And then the interest rates we know are going higher in the U.S. You couple all these fundamental factors together, you're going to pound the U.S. dollar Swiss is going to be a raging bull, meaning the Swiss is a bear. To see it above 120 within the next year is very likely. In fact, we could be trading, like I say, anywhere up to $1.35 up to $1.50 of U.S. dollar strength, or U.S. dollar Swiss strength as far as a bull market target. So am I very bullish? Obviously I am. Now, are we going to have swings? Absolutely we are, but I think that every downside move in the U.S. dollar Swiss is going to be a correction to take advantage of. And speaking of correction, as we're speaking, we are banging the lows. We just tagged our 50% level from this most recent shorter swing, higher move high to higher move, higher move low to higher move high. So bam, we just felt that little area right here. So the question is how deep will we penetrate this today? I think that you can fall right in the middle of this range. Remember, if we fall through it, that's not the worst thing in the world anyhow. We need to have this type of correction to smooth out this rally. At least that's healthy. Does that mean it's going to happen? No, but it would be healthy for it to do so. We may also come down into this area, bounce around, get a little sideways, start to rally a little bit more, and maybe even fail and then hit down into this area. There's a lot of scenario. We'll see how it pans out, but right now it's interesting that as we're talking in this webinar, we're getting this market to touch right into this area. So let me see if there's any questions on Twitch. No questions on Twitch. We don't have any questions on YouTube either. Just want to do a quick, if you haven't done so, please share our video, those of you that are watching it. And even if you watch it, even when it's recorded, please share it if you wouldn't mind. And same thing on Twitch. Let people out there know that we are broadcasting. Oops, oh, that one was already broadcasted already. All right, okay. All right, so we are just putting a couple links out here to let people know that we are out here and dealing with you guys live, checking out the U.S. dollar Swiss. All right, so we figured out this breakdown here. Now, should we get a rally, obviously we need to take out this previous higher move high that was up at $1.06. Remember, where's our price targets? Now, are we going right up to $1.20? No, that's not going to happen. But with the extreme momentum that we have in place, I think that once we do breach this level, we can go from this basically 101 area up to, I would say, 102.5, and then we'll probably start to see a little pullback. So yeah, a good, I would say, $1 to $2.50 move once we breach this through this resistance. And, obviously not just in one day shooting up there, but definitely prodding, kind of like a move like this. Boom, blast up, and then constantly be making new highs every day with very small pullbacks. At least that's the scenario we're looking for. Let's look at the Australian dollar, US dollar. Okay, Australian dollar, US dollar, you can see this one has done the same as all the other major currencies. It's pulling back again today as well. This bear trend, I believe, is going to stay intact. We pounded through new lows over the past week and a half. This market's weak. It's lower move lows, lower move highs. This is being viewed as a correction. If dollar strength comes roaring back against the euro, the pound, and also the Aussie dollar, then the trend is your friend. I think you're going to continue to see this market get battered. Selling rallies is what I would look to do if you're a bear. Selling into new lows, I would use caution. But as far as being a bull, keep your risks very tight, because this market's making lower move lows and lower move highs. If you're a bull, you're taking a counter trend trade. I'm not telling you not to take advantage of signals that you may have. We had a short-term buy signal that was right here that help to set off this correction that we are in right now. We set a higher move high today. We're lower on the day. Doesn't mean that we're not going to make higher move highs today, let alone into tomorrow or whatever. So, I mean, we'll see how that goes. I don't know as far as how much you can expect to the upside. Should we get another rally right now? I think that you definitely have to look at this as a very bearish case scenario for the Australian dollar, US dollar. One of the things is that you got to realize that with Shanghai getting all jumbled up and China having slowdowns in manufacturing, that creates a slowdown in orders for the Australians. So as far as their economy, and if the COVID lockdowns start to come back to Australia again, well, that's going to be a big deal as far as how you're going to see things pan out as far as strength in the Australian dollar or weakness. Should they go back into lockdowns, well, you're going to see a lot of weakness. And if China doesn't start to open up their cities, especially Shanghai and their ports, and get things running again, get it moving, get something going. Its economy, their economy, let alone the world's economy, needs to have this happen. Otherwise, we're bouncing around in limbo, and no matter what, that trend is going to continue to trend lower, meaning that we're going to have more supply chain issues. That in itself is a trend. You don't have to be a trader to realize that the world's not moving in the right direction right now. We don't have businesses are closing everywhere. Businesses aren't opening. Supply chains are not getting better. They're getting worse. It's not that things don't exist, but supply shortages are being created because of all this jumbled mess. And unless we see some sort of turnaround anytime soon, this jumbled mess is going to continue to really derail the strength and value of not just a bunch of economies, but their currencies. So this is, if there's any reason to support the idea of not having one global currency, what's going on in the world today is, are we benefiting because the U.S. dollar is a bull? The U.S. dollar is not a bull. It just doesn't happen to be as weak as the other currencies. So it does benefit us in the fact that at least our inflated exports aren't as inflated as they could be. The biggest problem, though, is that we are one of the biggest consumers of the world, so the question is how much will we continue to consume, and a strong dollar is one of the only ways to maintain that. Once the dollar does turn, which at the very least it's going to have a correction one day, this bullish trend is not going to last forever. And when that happens, well, that's really going to be a big impact, because then that's going to hurt all these other currencies as well. It's going to be hard for them to really get a big bounce, because as the U.S. purchasing power all of a sudden shifts from being very strong to becoming weak, even if it's just for a short term, in an inflationary environment, how much purchasing of exports of foreign products and services are we going to do? And so that'll be interesting. We're getting to that point. We're not there yet. I think that we're going to be there sometime around. Probably after the elections, midterm elections, but it's coming. We're going to see it from the end of the summer going into the end of the year. And I'll tell you one thing: things aren't getting better. Inflation is going to be skyrocketing. Shortages are going to be occurring. The price of food, everything through the roof. So unless we have cooler heads prevail, remember, everything we've been doing for the last 2 years has been wrong. It's been created these situations. Putin didn't do it. This didn't all just happen because of the Ukrainian-Russian conflict. All this stuff has been set in motion for the past 2 years. All these trends, they're in motion. The U.S. dollar yen has been tanking for a year now. So, I mean, this is because of the things that have happened in place between the lockdowns and the repercussions and the collateral damage of having had lockdowns. Doesn't matter what your take is on whether we should have done it or not done it. Doing it caused these things. It will only make matters worse as we continue to do it again. Obviously, insanity is thinking that we can do it again and things are not going to behave the same way. We know that it's going to do the same thing. It's going to make things worse. So, and these lockdowns will definitely continue to perpetuate for Australian dollar, US dollar. So as far as where's the direction to go, we don't have many numbers on this one. This one's becoming an anomaly because you have to even look at its little compadre, the New Zealand dollar, US dollar. Not quite the strength as the Australian dollar had on that correction, did it? This one's much weaker. They're in tandem, but not that much in tandem. The volatility to the downside on this one is much more severe than it is in the Australian dollar. Obviously, it's a smaller economy, and look at the bounce. Not quite as strong as a bounce as the Australian dollar, US dollar, is it? No, it's not. So, and that tells us a lot that this corrective move